Hey guys, what's going on? My name's Adam, and thank you for joining me today. So again, we're going to be doing something a bit different. Let me know if you enjoy it. We're going to be talking about what a special purpose acquisition company is, or a SPAC. So new ventures, such as Virgin Galactic, which is involved in space tourism, and Nikola Motors, which is involved in electric vehicles, have become listed companies on the stock exchange by this route, right? So a similar thing has happened with the electric truck called Lordstown, and they're merging with Diamond Peak Holdings, which is a SPAC or a special purpose acquisition company. That's a short form. Um, and basically, once they merge, they're going to be listed under the Nasdaq under the new symbol RIDE. Okay, so basically, you can read the definition here, but basically, a SPAC is a shell company listed on the stock exchange with a view to merging it with a real business. So it sort of avoids some of the pitfalls of a traditional IPO. And the traditional view in Silicon Valley is that the IPO is not a very nice process. There's typically a fixed fee of up to 7% of the sum raised, and the value of the company is generally lowballed, just so there can be a nice increase in the price of the stock the day after it is listed publicly, right? And so also the main reason why entrepreneurs at Silicon Valley dislike the IPO is also that they lose power, right? So they're used to being big shots at Silicon Valley, and now they have to transfer their power over to Wall Street, right? Um, so basically, now enter the SPAC, which is sort of pre-cooked IPO. Um, so pretty much a shell company is set up by a sponsor, right? The SPAC is listed on the stock exchange via an IPO. So the SPAC in this case would be for Lordstown would be Diamond Peak Holdings, and that's listed on the stock exchange via an IPO, right? And the sponsor then finds a private business for the SPAC to acquire with the proceeds of the IPO. Typically, this will be sort of like a fairly mature company. So now Lordstown Motors, whose owners and venture capital backers are looking to sort of cash out. And then the private company merges with the SPAC following a shareholder vote. And then it is then publicly traded, right? So then Lordstown Motors will then be publicly traded on the NASDAQ via the new symbol RIDE, right? So the appeal for Silicon Valley would be that there's no roadshow, no sort of it takes much less time, and because it's a merger and not an IPO, the selling firm can disclose more info to the buyer, including financial projections, right? So the price is negotiated directly with the buyer, and after the money has been raised, not before. And so basically, it is all but certain, rather than at the mercy of the changing moods in the stock market, right? Stock market generally fluctuates an incredible amount. So it's rather than at the mercy of the changing mood in the stock market or a last minute discount imposed by the bankers to sweeten the deal for clients. There's none of that, right? It's just basically a merging of two companies. So the downside of SPACs, however, though, is that fees are unavoidable. Sponsors are typically paid with a 20% stake in the SPAC. And so this is, in essence, an indirect charge on the acquired firm. And then, of course, it is obviously not cheaper than an IPO, right? Although it may take less time. So, I mean, that's just what a SPAC is, if you're interested. And thank you for listening to me. If you like this video, please like and subscribe, and have a fantastic day, guys.